All right, let's get started, folks. Thank you so much for your time this morning. We at Cashflow Champs are helping investors gain financial freedom through passive investments in real estate. Today's topic is asset management in multifamily syndication. Usually, you have heard me and Paul Sr., but today we have invited Charles Seaman, one of our lead partners. And Charles has been involved in asset management for last 15 years, and he's a lead partner at Cashflow Champs. Neither of us are attorneys or financial advisors or tax advisors. This webinar is for information purposes only. Please seek professional advice from appropriate personnel. We at Cashflow Champs have $146 million in assets under management. I personally do co-host Cashflow Champs Real Estate Podcast. Charles Seaman has been out there in the industry for about 15 years. And at Cashflow Champs, we are into multifamily syndication. At Cashflow Champs, if you want to talk to us, you can schedule a call with us anytime. The first QR code on the left-hand side, you can take a picture of these 3 QR codes, along with asset management, and many other things. Charles Seaman run underwriting sessions every Saturdays at 4 p.m. These are free of cost, and it is our way of giving back to the world. And these have been going on, almost, 50, 60 people join those calls. And Charles is the lead on those underwriting sessions. Feel free to register for those sessions every Saturday at 4 p.m. We have never missed even a single session in last at least two to 3 years. In addition to that, we have an inner circle where we have a small group of people, those who have known about multifamily but are ready to jump into doing their deals. And this is an inner circle, and by invitation only. We take applications, but feel free to scan this QR code on the right-hand side and fill in your information, and somebody may be in contact with you, but we have a waiting list because it's a very small exclusive group that we have. Jumping into the topic today is asset management. And I was about to talk about asset management, but then I thought maybe I should ask Charles to talk about it. We are going to discuss what is asset management, how do we manage our property manager in multifamily, what kind of reportings or meeting structure we put with these property managers, what are the pitfalls that we should avoid in asset management. Besides that, there would be a lot of other things. Feel free to ask questions in Q&A boxes, but I will hand it over to Charles. Charles, over to you. Thank you so much for joining today.
Prashant, thanks for having me, and thanks for the introduction. So we're going to start off here with asset management. What is it? So it's a term that many of you probably hear in the syndication space, and basically what it's doing is taking a blend of both operations and accounting, and it's helping to make sure the asset performs and delivers the projected returns. So that means you want to be in contact with the property management team, you want to be giving direction, and you want to be adjusting and pivoting as needed to make sure that you're on target. So what do you do specifically with multifamily properties? Well, you're working very closely with the property management team. So the property management team is going to be in charge of day-to-day activities. They're going to be the ones that are at the property leasing units. They're going to be dispatching work orders. They're going to be collecting rents. So they'll be doing all of the nitty-gritty that really ensures the success of the property. As the asset manager, you're going to be charting the course that they're going to follow. So you're going to tell them, first off, what the plan for the property and the investment is. So if you want the property manager to be able to successfully execute your plan and your vision, they have to be aware of what your plan and vision are. So the first thing you do is when you acquire a property, you want to have some type of kickoff meeting where you're getting everybody from the management company who's going to have an active role in the operation of the property involved so that they understand what the expectation is. And when I say setting those expectations, you want to be specific and you want to be clear. So you want to tell them, this is our projected NOI by the end of year one. Here's the rent that we intend to be charging. And here's what we have to do to get to this point. So set the course, tell them what the rents are, and make sure that they're able to hit them. So as part of your process, even before you wind up getting a property under contract, you want to be using your management company as a resource so you can understand what realistic projections are, because you want to make sure that you're giving them targets they can hit, but also targets that you as an asset manager feel good about promoting to your investors and being able to achieve. So, very important parts. You want to be in contact with the management company on a regular basis. So, at the bare minimum, if everything is running really smooth, property is stabilized, distributions are being paid out as expected, you're probably spending a minimal amount of time on those properties, and you're really having a weekly call with the management company just to get an update. And in those weekly calls or meetings, what you're doing is you're going over the KPIs of the property. So, what KPIs do you need to look out for? Well, you want to look out for collections. That's going to be a big one. So how much did we bill out this month on the first of the month? How much have we collected to date? How much is still outstanding? And you also want to see what's outstanding from prior months, because that's going to be important as well. So if there are tenants that are carrying balances over that are from prior months, you want to be aware of that, and you want to come up with a plan with the property management company to figure out how to get those tenants to pay or how to get them out of those units, one of the two. Aside from just collections, you also want to be focusing on occupancy. So if you're buying a stabilized asset, when I say a stabilized asset, it's usually one that's going to have a 90% physical occupancy or greater. You want to do your best to maintain that occupancy. Now, that doesn't mean you're not going to have move-outs. You're certainly going to, because as you push rents, what happens is in the natural course of business, people are going to leave. Sometimes rents go up too much. Sometimes they have a change in life circumstances. There can be all different reasons. And you want to account for that and realize you are going to have some. You also want to be looking at traffic. So what is traffic and why is that important? Well, traffic is going to be the amount of leads that come into the property. And you also want to track where those leads are coming from. So that way you understand what marketing approaches are working and which ones aren't. So how many are coming from social media leads? How many are coming from apartments.com? How many are coming from Zillow? How many are walk-ins off the street? How many are referrals? So that way you can understand the demographics and the workings of the tenant base at that particular property. You also want to be tracking work orders. So aside from the financial numbers, work orders are a major reason why people leave and they move to different properties. If they're submitting work orders and there's a lag time in the time that the management company is able to get those work orders processed and handled, many times that creates bad will with the tenant base. You want to be creating goodwill. And in order to do that, you have to be servicing their work orders typically within 24 to 48 hours. So make sure you understand how many work orders are coming in on a regular basis and how many are still unaddressed by the end of each week, and how you can figure out a way to optimize that process. So those are the four main KPIs that you're looking at. Other ones that you may also look at is exposure. And when I say exposure, what I mean by that is how many leases are expiring over the next 30, 60, and 90 days. So you want to be able to plan ahead. So in a perfect world, you would have the same number of leases expire every month. In reality, that doesn't always happen. You may have a particular month where you have a lot of exposure, and you may have another month where almost no leases are expired. So you want to plan accordingly. If you have a month with a lot of exposure, most times you don't really want all of those units to become vacant. So your job as the asset manager is to figure out which tenants, you may want to keep and give lower rates to, so that way they stay and they don't necessarily leave, and which ones you may want to be more aggressive with the renewal rates on, so you can test the waters a bit and see how much you can get, but still keep the occupancy of the property stable. Very, very important. So the other thing it's going to do, it's also going to be tracking the financials and the bank account balances. So those items I mentioned are things you'll be doing on a weekly basis. Now, when you first take over an asset, especially if it's a value add asset, and let's say there's a physical component to that value add or even a messier operational one, you're probably going to need to be in contact with the management company more than just once a week. And sometimes it might be every day. So you'll need to be involved so that way you can help the management company execute the plan and turn the property around. We bought an asset last year. With that asset, we knew that we had to evict about a third of the tenant base, and this is on a 100+ unit property, so it's a good amount of tenants. And we're involved with the management company on a regular basis to help them execute that. There's challenges when you're evicting that large of a number of tenants. So you need to be able to go in there and you need to really handhold the property manager's hand so that way they can stay on course and make sure that they're staying focused on the plan. You want to also be looking at monthly reports. So aside from just the weekly KPIs that you go through during the calls or meetings, you want to be getting monthly reports. That's going to be an income statement. It's going to be a balance sheet. For those of you who aren't familiar with accounting, let me offer you some good news. You do not need to be an accountant to be an asset manager, but you do need to have at least a functional understanding of accounting. And you need to be able to see when money's moving in a direction that it shouldn't be moving. So if you're seeing the cash go down more than it should be, you need to understand where that cash is going and why it's going down. Is there a valid reason for it, or is it just disappearing? So you want the balance sheet, you want the income statement, you want a trial balance, you want a rent roll, you want an unpaid bills report, and you want copies of all the bank statements and mortgage statements. So that way you're understanding exactly what cash is coming into the property and what cash is going out. And that way you can really compare to make sure that you're moving in the right direction. The absolute worst thing you could have is money moving somewhere and you as an asset manager not being able to explain or account for where it's moving. So that could bring up a question of where that money's going, and you need to really dig into it and understand that. So that's a very important piece. So what are the pitfalls you might have during asset management? Well, the pitfalls are that maybe the plan you had initially wasn't the right plan. And that happens even when you're experienced. Sometimes you think something will work and it doesn't. So you need to be able to pivot. Never get so married to a plan that you're not willing to adjust. If you have new information, sometimes you need to be able to adjust and you need to update your plan and update your strategy. And you need to effectively communicate that to the property management team. You also need to be able to keep track of the money. So the single biggest job you have as the asset manager is explaining where the money is. If you can't explain where the money is and where it's going and why there's more or less money than there was the previous period, then you're probably not doing a good job as an asset manager. You want to be able to do that because you have a fiduciary responsibility to the investors that those funds are going and being allocated where they should be. So those are really your major pitfalls that you're going to see. Most times it's either a planning issue or a communication issue. And if you do both of those things effectively, you can have a lot of success with the asset management side. Prashant, I'll turn it back to you.
But let me take it to the next part of this webinar is basically, we are multifamily operators at Cashflow Champs. We do multifamily deals and we invite investors to participate with us. And one of the deals that we are closing next week is basically Park Valley apartment homes in Atlanta. That's not really the purpose of this webinar, but I still like folks to know what we are doing. And this is a deal that we are closing in Atlanta within a week's time. Not that you want to invest, but at least know what we are doing. If you go to cashflowchamps.com/invest now, you will see details about the property. This is a 236 unit apartment complex, which is already upgraded. And we are basically buying it at a price with an assumption loan. And the loan assumption is the loan rate is 3.5%. So already cash flowing asset at 3.5% interest rate for next 9 years. This gives a lot of returns to our investors. I mean, our cash on cash. Basically, we have total annualized return of about 20%. The profit returns is 7, 8, or 9%, but overall cash on cash per year is about 8%. So we get about 8% per year, and in the end we get appreciation. So let's say for 5 years we get 8, about 40%, and in the end we get about 60% appreciation in 5 years. So basically doubling the money in 5 years. We have not seen a deal like this for a long time. We just want you to have a look at it. Not that you have to invest or anything because we are already capitalized. But if you want to invest, please connect with us. If you go to cashflowchamps.com/invest now. In addition to that, feel free to register for next week's webinar. We come every week and we talk about various topics. Next week, Paul Senior will take another topic. Feel free to register for that. And thank you so much all. That's all we have today. We wanted to keep it a little short today. Thank you so much, Charles, for jumping in and sharing valuable nuggets. Once again, this is Prashant Kumar and Charles Simmons from Cashflow Champs, and we look forward to seeing you in our next week's webinar. Thank you so much all. Bye now.